Let's come back to Nigeria, where the Finance Minister, Zainab Ahmed, is scheduled to provide a detailed breakdown of the budget 2021 document presented to the National Assembly last week by President Buhari. That will be tomorrow. On Thursday, Nigeria's inflation report for September is on tap from the Statistics Office, as August data showed a headline figure of 13.2%. So what do these two events mean for the current market week? Wale Olusi is the head of research at United Capital. United Capital is a listed investment bank, and he joins me now on the show. Good evening, Wale. It's good to see you.
Good evening, Bosin. Pleasure to be here, too.
Thank you. So what's your outlook? Let's hit inflation first. What's your outlook on the inflation report for September out on Thursday?
I mean, inflation for us is northwards. We're looking at 13.5, 13.4%. Don't forget that in September, a number of policy reforms came through. The now suspended electricity tariff was implemented. Even though it was suspended, we know that some discos have actually, implemented it immediately. And even if they are going to suspend that, a lot of users have already paid, for their cards that expired during those periods. Don't forget that we also have hike in fuel prices. This key element that affect energy prices will definitely affect, the model that the MBS uses to calculate inflation data for Nigeria. So from 13.22% in the month of August, what we are seeing is, a further increase. And of course, the pressure on the exchange rate is still there, amongst other, burning issues across the economy.
But when you look at inflation, yes, food inflation will be, but we saw the economy easing further. The government continued to announce some measures of the lockdown. We're now close to 100% lockdown easing, as it were. Hotels were back. Restaurants are allowed to fully open. Clubs and nightclubs, churches, whatever, places of worship and all that. So do you think we've seen a bit of a consumption pattern that will change in September from August?
Well, I mean, consumption will probably increase in the month of September because, yes, bars are open, churches can now open, which will mean that, people will need to transport more. It will also mean that traffic on the road will increase because on Sundays, unlike
by the way, schools are also reopened.
Exactly, schools are also reopened. But apart from that, there's also a lot of liquidity issue. Yes, I know that the MPC, really thinks that this inflation is much more driven by structural issues. But there's also a lot of cash in the system, and monetaries will tell you that with a lot of cash in the system, it has a tendency to pressure up prices. And we've seen that clearly as far as asset prices are concerned. It will definitely have a telling impact on commodities.
But what about the interest rate decision within the month that the inflation report will come out?
Correct. I mean, that was what I was, referring to when I mentioned the MPC earlier. The decision to cut interest rates by 100 basis points is also another accommodative stance from the monetary authorities. That will also definitely pressure prices because, it puts more money in the system, basically.
So how do you give us, how impactful do you think the inflation will be on financial assets, like the rally that we saw over about 2 weeks on the equity side?
Well, as far as I'm concerned, I think a further hike in inflation rate definitely means that, the search for yield, the search for alpha return that is above the current, yield environment in the fixed income market will continue. And I think that's positive for equities because the more inflation increases, what we are saying is that the real return on fixed income, investment, goes into further negative. As we speak today, is about 5% negative if you compare it to 10-year, bond yield. And that's the only country across the sub-Saharan Africa, Nigeria, that we are the only one with a negative, real return. So it means that the search for yield will continue. People will continue to look for where else they can make, a positive return on their investments. And as far as we are concerned today, it looks like equity is the only place you can do that. The same international bureaus that you showed us earlier that declined 9% today was up about 10% earlier when the market opened. So those that bought last week who sold this morning, I've already gone away with about 10% gain today alone. And if you do that again tomorrow, because the way it dropped 10% today, I'm sure it's going to be up tomorrow morning opening because there's an upside.
So it's basically bargain hunting. You have the dollar on the table, take it off the table, as it were, put it in your pocket, hope for another day. What comes again, you take it off the table. That's on the equity side. So how do I play the fixed income market? We're looking at about 370 billion naira maturity on tap this week from the central bank.
Well, what we saw as far as the fixed income market is concerned is that last week, because of the huge maturity in the system, over 500 billion, bringing total liquidity in the system to over 900 billion, there was a lot of, bargain hunting in the equities market. It drove the rally to an extent, but also there was also a bullish sentiment across the fixed income market. Hence, yield on some bond and fixed income assets actually dropped about 100 basis points last week as well because of the huge demand in the system. This week, the size of maturing liquidity is not as much, but I think you will have a similar trend because over 300 billion is maturing, and give or take, those cash has to go into some form of investment asset or the other in search for yield. They won't just sit down idling away in the bank with fixed income rates at record lows and NTB and all these other money market rates at record lows. They have to search for assets. So I think that will probably stoke demand for equities later on in the week as well, and then pressure rates in the fixed income markets lower.
And we don't have a calendar from the debt management office yet.
We don't, not yet.
Okay, well, that is an interesting conversation. But let's continue this two-part economy and markets chat after the break. We'll talk about the budget. Wale, tomorrow is when we will listen to the finance minister. We expect to harvest more information and details from the finance minister and her team when they brief everyone tomorrow. Let's keep it there. Let's see what's in that for the market, as well as the managed funds when we come back after the break. You're watching ARISE Xchange. So let's dig further into Nigeria's market week as Budget 2021 unfolds in more details by the finance minister tomorrow. By this time tomorrow, we should all have that in the can. My guest, Wale Olusi of United Capital, is still here on the show with me. So the New Year budget, Wale, is breakdown scheduled for tomorrow. What are you looking to hear from the finance minister? And do you think this will be market sensitive on your calendar?
I mean, well, maybe just some further detail into the highlights we've already seen. We know the government is planning to do about 13 trillion, about 7 trillion in revenue and 5 trillion in deficit financing. We've seen the assumption for oil prices at 40. I mean, there's really nothing you can do about oil prices, perhaps the most difficult variable to forecast. So if it swings in our favor, maybe we'll up it later on. If it doesn't, then we'll have to revise it lower. Well, some of the concern, however, include the fact that we're expecting growth to do about 3%, inflation at about 12%, exchange rate at 379. I mean, these are huge assumptions that they're a little bit difficult to see how those issues are going to, happen looking at the current reality. But perhaps the minister is going to shed more light on why the government is thinking, much more optimistic than the market tomorrow. I mean, those are some of the things we will be looking at to see, and where in specific terms, this spending will be going to, and if possible, the level at which the government will be able to execute this budget, something close to 100%, because we've not had that in recent time because we don't have money.
What about the borrowings, the deficit side, and how that will be done this year? We're almost done, by the way. We're not going to the Eurobond market. That looks unlikely between now and December. Perhaps the DMO will be taking the government back to the Eurobond market next year. Do you think that is a possibility?
I think it's a possibility, although we'll be doing that at a very, very expensive rate, considering realities now and as our next year. It will be quite, expensive. But I mean, if we are not borrowing from the Eurobond market and we've already accessed our facilities with the IMF, I'm not sure where the World Bank stands now. And clearly, we probably are going to be doing maybe 50-50 in terms of, domestic borrowing and then foreign borrowing, of which Eurobond might be, part of that.
At what rate do you think will be borrowed? There's so much money, there's so much liquidity everywhere in the market around the world. So that should be cheap.
Well, it depends on the maturity. If you are going 10 years, 20 years, 30 years, and the longer the maturity, the more expensive it will be. Investors in the international debt capital market will price us based on where they see oil prices now. They'll price us based on how bold they think the reforms are. They will price us based on how much tax revenue they think government can generate. And the commitment of the central bank to do whatever is necessary to keep exchange rate within the level that is sustainable for both the government and the economy to keep things going. So I mean, it depends on the maturity we are coming out. We come out at the longer end of the curve, it will be high, something around 9-10%. If we do something mid, well, maybe a little lower. So it depends on the maturity we are, coming out. But if you look at the fears around what happened in Zambia,
it's tough for the government, because if you take a shorter dated bond, then you've got to fund it very quickly. Where's your cash flow coming from?
Exactly.
Because the outlook on oil right now hasn't gone anywhere. We're seriously above $40 a barrel.
Yes, absolutely. So those are the issues.
This is going to be very tough. It's going to be very interesting listening to the finance minister tomorrow, trying to break it down with a few Q&A from the media, by the way. Finally, how has managed funds performed under the recent rally?
Well, under the recent rally, what we've seen is a situation where apparently people have been holding their money in funds just to wait for opportunities in equities. So we've seen some movement, from, the mutual fund into equities just to take advantage of the rally. But on the whole, we have also seen people who have made so much money, because over the last 2-3 months, they've invested in equities. And so many of them were taking profits and then bringing the money back into, the likes of our bond funds, as well as, money market fund, just to keep it there until they see opportunities again. But I think a lot of funds have flowed into the, managed funds lately. But some of them are also taking advantage of the rally in the equities market. They move them out momentarily to take advantage of that.
When folks make money, they don't make noise. It's surprising.
It's also interesting to note that, some of the equities mutual fund have also turned positive, after a lot of pressure that they've gone through due to the COVID. But with the recent rally, a lot of, equity fund or balanced fund or mixed fund, as you may like to call it, many of them have turned, positive now due to the rally we saw in the market as of last week.
It's good to have some positive news from the market. Thank you so much, Wale Olusi from United Capital, for your time today.